Thank you, guys. Thank you so much. I'd like to welcome each and everyone onto this call once again. It is the last day of the bootcamp and the last fire of the bootcamp. So I'm going to try and give you the value you deserve before we leave. So what am I here for today? Well, let me introduce myself. My name is Francis, just like Philip said. I'm a smart money and a harmonics trader. So today, the only thing I'm going to show you is how to use smart money and harmonics together. Yesterday, we spoke about harmonics. Today, I'm going to speak about smart money. Some of the key things that you need to know about smart money. I'm going to keep it very simple and very, very basic. So before I go on, I want to ask, what is smart money trading? Smart money trading is a strategy that capitalizes on when the big banks, the big buyers and sellers in this market comes into play. We capitalize on when these big banks comes into play in the Forex market. You on this call is probably asking yourself, how would I know there is a big bang in this market? The thing is, they always leave clues in the chart. They always tell you, I am here. And if you're not a smart money trader, you'd never be able to identify where they are and how they came in. For you to do that, you have to understand the story behind what they are trying to do. And the story is that smart money do not want you to win. It is as simple as that, guys. Smart money do not want you to win. And that's just the thing. If every single individual like you can just jump into the market and win some money off the charts, who would be going to work? And what would the banks be doing? Nothing. So they try as much as possible to understand how we are trying to gain some money off this market. And then they put a cheat code on us. And that cheat code is the smart money concept. If you go on Google right now and you want to know how to trade Forex market, trust me, the only thing you're probably going to be seeing is trend lines, rectangles, M's and W's. That's what they're going to give you. And they do so by letting you understand that this is how you can be profitable. But for them, they know exactly that these things are their traps for you. And today I'm going to make it clear to you why they are traps and what they do with these traps. So with all this talking, I want to show you what this market offers and how you can capitalize on becoming profitable. So let's assume we are in an uptrend, right? We're in an uptrend, price is walking up slowly, and everybody is happily trying to catch something of this market. It gets to a point that you realize price is not moving as fast as it was in these areas. If I should pull a trend line from here to there, I can easily pull a trend line and trade it. Whenever price bounces off this area, I am going to buy. Whenever price bounces off this area, I am going to buy. Should the market offer this scenario 100% correct, who is going to lose? Nobody. And you in this call today know for a fact that you've ever tried this before. If you've ever tried this before and it went against you, give me a 1 in the chat box. You place a trend line, hoping it holds, and then it just broke it. And the fact is, they know exactly how they managed to put this setup in place to play you up. So what happens from here after the bounce, they intentionally slow down the process. See price doing something like this. Eventually, there is something happening up here, an M, where everybody in Forex trading is so happy about trading it. Oh, somebody's saying all the time, I'm sorry, mate. Right? We love the M's. We want to see the M's because whenever M is formed, we want to trade it and make some money off the market, guys. Before I go, and I want you to know that M is not your friend. Let me close my WhatsApp because it's making too much noise. I want you to know that M is not your friend, neither is a W. I am going to show you with an M, and from there we'll move on to W. How will I know when institutional traders come into this market? This is when they come in. Whenever you see a price go above this area, this is when institutions are in the market. And the key thing about these institutions is that they love what we call liquidity. Wishful and money. Oh man, Matt, you crack me. You see, the very key thing about this smart money people is that they love what we call liquidity. And what is a liquidity? I'm going to explain what a liquidity is. Liquidity is where we have a group of price hitting a certain particular price area for so many times, probably one or two or three times. Sometimes you can see it hitting it like 4 times. And that is when you see people dropping lines and tell you it's a strong support area. Well, today I'm here to tell you that your strong support area is where my money is sitting. Did you hear that? Your strong support area or your strong resistance area is where my money is sitting. And I'm only able to say this because I've gotten to the point that I understand strong support is nothing to me in the market. I'm going to follow these smart money people and make money off you that thinks there is a strong support. So whenever I see a strong support, I am already thinking this is where price is about to move next. Okay, so what is an institutional candle? I am going to show you what an institutional candle is. Institutional candle is always the last up move candle or the down move candle before a down move or an up move. I've probably confused you a little bit. Let's divide it into bullish and bearish scenario. So for a bullish scenario, an institutional candle is the last down candle before an up move. Let me show you an example on the chart because my time is very, 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 very little today. And I don't want to go past the time. All right, let's observe something around this area. Price was up here before down there. And then he came here again before up here. And then it came here. I'm going to put numbers to it to make it as simple as possible for you. 1, 2, 3, 4. Oh, what am I doing? Let me just clear them quickly. So this becomes my 2. This becomes my 3. This becomes my 4. And this becomes my 5. If you look at how price was moving, from 1, it came to 2. From 2, I think I missed 1. So this therefore becomes my 3. This becomes my 4. This becomes my 5. Let's label 6. I want to make sure I show it to you as simple as possible. So guys, look at this. From 1, we went to 2. From 2, we went to 3. From 3, we went to 4. And from 4, we went to 5. Look at how price is walking. Every time that we move 2 hurdles, so assuming we move from 1 to 3, there is something very important in the chart. Can somebody tell me? I'm not going to mention it first. I want to see if somebody knows in the chat box. Every time we move a hurdle from 1 to 3 or from 3 to 5, there is something very key in this market. Can somebody tell me right now in the chat box? Higher high. Thank you very much, Cha. We are creating higher highs. And the higher highs is being formed as a result of price creating or breaking market structure. In order to create a higher high, you have to break a market structure. And what do I mean by market structure? We need to go above the 1 position where 1 began from. We need to go above it. Price has to move above it in order for us to say we have a break of market structure. Again, from 3 to 5, if you look here, we went about 3. And this is the jumps that I'm talking about. Now, guys, I want you to pay attention to this area. I want you to pay attention to this area. The last down candle, which is the black candle, in my case, is black and blue. Some of you on your chart is probably going to be red and green or red and blue. In my case, it's black and blue. Don't ask me why is this colors. It's just personal preference. I'm sorry. But yeah, the last down candle, which was the black candle before the up move. Can somebody in the chat box tell me what is significant about this candle? Thank you very much. It is an institutional candlestick. And how did I know that this is an institutional candlestick? Immediately that candle was formed. Look at how much price moved. One candle moved 33 pips. And guys, you need more than millions of pounds to move the market for a single pip. Can your small account be able to move the market 33 pips? That's the question I'm asking you. And because of that, if I see this move, immediately I see this move. The last candle is my friend. That last candle before that move is my friend. I am going to wait for price to come back there. And that becomes what we call the institutional candle. Many of you do get confused. Francis, I saw this candle. I'm trying to play it as an institutional candle, but then it hit my stop loss. The only reason why I hit your stop loss is because not every last candle is an institutional candle. But then the difference is the last candle from which a break of market structure happened is an institutional candle. There's somebody here that if you didn't, feel free, I can repeat that. The last candle from which a break of market structure happened. So assuming in this scenario, the last down candle from which a break of market structure happened, that is an institutional candle. How do you know it's going to be the last candle? The only way I know it's going to be the last candle is that I want to see from which candle break of market structure occurred. So in this case, if my candle is sitting in the middle before the break of market structure, that is my institutional candle. Does that make sense, Harry? In this scenario, it is really The last, okay, you want to have an example. Look in this scenario. Let's pay attention to this area. Let me change the color. I'm so glad we have Euro USD. Euro USD, you can see lots of things. Look at this last candle right here. This last black candle right here. The break of market structure right there. Look where price came back to. Oh my God. Oh my God. It's not by mistake that price refused to come all the way to this last candle. It's not by mistake. The only difference is that you were not able to identify the right institutional candle. Because this was the last down candle, bearish candle before the bullish move, price went up and came all the way straight into that same candle before the up move. Again, from there, look, they created this, and this is where they came back in. And look, break of market structure, they worked straight back into the institutional candle and up move again. Guys, this is not by mistake. If you are able to identify the right institutional candlestick, I can guarantee you 95% of the time, price is just going to walk straight into your area and move. What other ones are the right ones? I can't show you. I can't show you enough, Mike. I can't show you enough. So many on here. Let's just focus our attention right here in this last candle right here. Before this break of structure here, you might be asking me, Francis, where's the break of structure? But if you look at price on smaller time frame, you look that you can attest to the fact that there was a break of market structure here. Price broke it, came back into this last candle, and that's it, straight away goes. So many scenarios. Let's show another one. Let's show you some more. Let's show you some more. Look in this area. Last candle up, break of market structure, price came back into it, wicked it, sell down. I can't show you more than enough. It's like a magic in the market. Last candle right there, break of market structure right there, price came back into it, walked straight into it and dropped. Where there is imbalance, there is a break of market structure. No, don't confuse yourself. Is the black candle at 0.6 also an institutional candle? Let's go back to 0.6. The black candle at 0.6, is it an institutional candle? Of course, it is an institutional candle. The reason is, as it got formed, there was a break of market structure up here. Hence why price came back into 6 and moved up. I think somebody is catching it right now. Are we all right on institutional candles? Give me a 2 in the chat box if we're all right with institutional candle, and I can move on to the next stuff. Brilliant. One more thing that we have to know about institutional trading is the formation of imbalances. The formation of imbalances. How would I know that there is an imbalance in the market? Oh my. How would I know that there is an imbalance in the market? I'm going to use this area as my example. Look at the way price were moving so nicely around here. The wicks were overlapping each other nicely. Wicks overlapping, wicks overlapping. Immediately price got to this area. From this last blue candle, the up move candle, the candle that went straight down here left a space around there. Let's zoom in for you to see exactly what I'm talking about. It left a space, so that wick of this blue candlestick, in between that is a strong price action that separated that wick from this wick. So in this scenario, we don't have this wick to wick. So this space that has been created in the market right here is called an imbalance. Again, let's look for some more example. In this case, look at that candle right there. The wick, I want you to draw a line from the base wick. And again, I want you to draw a line to this base wick. Because this wick is not touching that wick, that is an imbalance. And if we look to the left, look at what happened. Price came back straight into it, filled it up, and it dropped. Let's show you some more. Look at this area. This last candle, let's put a line to the wick. And let's put another line to that wick right there. Because there is a space between that wick and that wick, not touching, hence why price came down, filled it up nicely, and then it moved. Are we starting to make some shifting in ideas on this call in terms of imbalance? As there is usually an IC that follows an imbalance. Not usually, but I'm gonna give you my confirmations as to how I trade today. Some of you are wondering, Francis, you're always sniping the stuff, but then I've tried so many times. I know what an institutional candle is. I know what an imbalance is. I know where breaker market structure is, but I'm still not getting it. I'm going to give you my confirmations on this call right now. Let me just give you the key stuff. Is that an IC before BOMS? Sorry, I don't know what BOMS is. I think breaker market structure. Okay, yeah. Usually an IC will come before a breaker market structure. Usually there is going to be an IC before a breaker market structure. Now let's head back down. Oh my, Euro USD is doing a nice job. Who is in the Euro USD buy? Guys, if you're in the Harmonics group, I shared it for free. So don't tell me you missed that. It is there. Oh, hit your TP. Well done. All right, let's not lose focus. My time is going. So now in the chat box, I want to know, are we clear on imbalances? If you're not, feel free to let me know. This session belongs to you. I'll show you some few more examples before we move. I'm assuming it's very clear. Yes, not clear on IC before breaker market structure. Okay, not clear on IC before breaker market structure. All I'm trying to tell you is this. Look at this right here. Before the breaker market structure right there, this is an institutional move. It is an institutional move. That last candle, the down candle before the up move, that broke market structure. Follow my words. The last down candle before the up move, that broke market structure. This is an institutional candlestick. Yesterday, there was something that I thought on the call. Divergence. Can we see divergence on this area right now? Nice. This is the exact reason why I was happy to take the buy. After the break of market structure, I was taking my lowest point from here. Price went back, came all the way into this institutional move right there. And there, that was my buy. Look at the confirmations: divergence, institutional candle, break of market structure, retracement, buyout. That's it. Why did you not take 4? Have you forgotten that 4 has already played? Did you miss this buy? Am I starting to make sense, T? Have you forgotten that number 4 has already played? This is number 4. It has already played. Number 6 has already played. The only bit that is still standing is number 2. Hence why price came to number 2. And look what they have manufactured on number 2 area now. Equal lows. So don't be surprised when you start seeing price coming all the way down. So now in the chat box, I want to know how many of us knows what an imbalance is, an institutional candle is, and what liquidity is. Give me a 3 in the chat box if you know all of it. Come on, 49 people on the call. I want to see the 3s. If you don't know it, don't be ashamed. Let me know. Fab. So now, how do I trade with all these ideas? Because if you go on the chat, there are so many things. Warning, I want to put this out first. Some of you are so quick and want to jump onto trading on 1 minute time frame, 3 minutes time frame, 5 minutes time frame. I want to share this. When I first started trading smart money, I traded daily time frame, 4-hour time frame, 2-hour time frame for 4 months before I attempted going on to minutes time frame. You might be wondering, Francis, why did you do that? The reason why I did that was because on a higher time frame, if you are able to identify an institutional candle, of course, your risk is going to be higher, but 100% of the time you are going to win it. It is less likely to lose a trade on a higher time frame after you've identified and you have my confirmations, which I'm going to share with you. If you have my confirmations on a higher time frame, on a daily time frame, on the 4-hour time frame, on the 2-hour time frame, you will hardly lose a trade. All right, let's put my laptop on charge and we can move. As I do that, if you have any questions, please feel free to put in the chat box for me. Now, Francis, what is your confirmations for trading smart money? Do you think this will reverse where the double top is? Well, let's see what happens. We're on this call. We will probably see it. Let me try and see if we can actually snipe this off right now on this call. I'm not scared to do dirty stuff, guys. Let's try and see. Let's watch what happens around this area. Before that, let's go on higher time frame, then I can do my job. Teach you how to trade smart money my way. Looking at charts now, the move has broken structure. Will that now start to retrace to collect the imbalance? Well, let's see what happens, guys. Before that, let me do my work teaching you how to trade smart money. Okay. So let's pay attention to this area, guys. There is something about this area that is so interesting. Can anybody say that? Can anybody see what I'm trying to talk about here? Something about this very area that looks very interesting. And my eyes are always drawn to the charts in this way. I always want to be able, harmonic pattern, of course there is harmonic pattern, but that's not what I'm trying to talk about here. When there is an interesting setup, guys, you can see it. You can see and you can feel it. I don't know if you don't feel it, but I can feel it. If I open my chart and there is something really interesting about what I'm looking at, straight away I can feel it. Institutional candle on higher time frame. Thank you very much. And what is the institutional candlestick we're talking about? This right here. And what is interesting about that area is the fact that I see liquidity here. And I see liquidity there. And before I go on, I want to make you understand that price will always walk in a way of liquidity. Where the money is sitting, where your support is sitting, where your resistance is sitting, that is where price will always walk to. So the very moment that I see these changes in the market, that is when I want to be able to snipe. Do everybody in the chat box agree that this is an institutional candlestick? If you don't, feel free to let me know. And the reason why that is the institutional candlestick is because it was the last up candle before the down move that took market structure. Thank you, Mark. The buy to sell candle. It was the last up candle before the down move that broke market structure. So Francis will not be looking at this as an institutional candlestick. And you can clearly see that when price came here, it walked straight through it. How many times has this happened to you? Feel free to let me know in the chat box. Has that happened to you before? You identify an institutional candle and price just went straight through it. The problem is that you chose the wrong institutional candle. And guys, I don't expect you to get to the point that you will be able to see it so easily. It will come with time. And that's the reason why I'm giving you the confirmation. The last up candle before the down move that broke market structure, it is very key. It's not just the last up candle. So would you enter on the next sell? On the next sell candle, I don't understand what you're trying to say, but yeah. Can you explain it further, because I'm a bit lost? Have they not already taken the liquidity that you just marked out? Yes, they have taken the liquidity, hence why price did not come back down here again. Once I sniped up this institutional candlestick, the reason why I'm not going to be so stupid and so ambitious. Okay, let me ask this question first. Have you ever entered an institutional trade? Your price is in profit, but then your target price did not get to your target. Have that ever happened to you before? The reason why price do not get to your target is because you are too ambitious and forgetting about where the liquidity is, where the money is. Price is just taking liquidity here. If I enter this trade, I'm not going to put my TP down here. I repeat, if I enter the trade right here, after price has taken liquidity here, I'm not going to put my TP here. My next TP is going to be an imbalance fill to look for a buy. And let's go on a smaller time frame, and you see what I'm trying to say. Look where price reversed. We came all the way down from there to fill an imbalance. Then we went up. So from your buy that you got from up there, your only target should be the imbalance fill and nothing else. Why? Because liquidity has been taken off. The next liquidity area is where you bought from. You are now the trap. I always say this to people. Because you entered off an institutional area does not make you the freedom fighter. You become a hunter as well. You're being hunted. You become a prey. Because that very area that you entered from, they will come back there again. The only difference between a person who is trading institutionally and making enough profit and another one who is trading institutionally and not making enough profit is when to get out of a trade. What if there are multiple imbalances? Do you take the first or the last? My question to you is, what time frame are you looking at the institutional candle or the imbalance? If I see 3 or 5 imbalances on 1 hour time frame, the only thing you need to do is go on a higher time frame and you're going to realize that it's just a one big imbalance. That's all. Why did you specifically choose a 3-hour time frame? I didn't specifically choose. I just chose it randomly. I just needed something to come down to a smaller time frame from the daily time frame. So it's not anything special. I was on a daily time frame and I wanted to come back on a smaller time frame to see what is really happening on a smaller time frame, because in a higher time frame, I cannot observe that imbalance right here. But the very moment I went on a smaller time frame, I realized there was an imbalance. That's it. That's the difference. So guys, you should be able to make good use of your time frames. Sometimes the imbalance is above and below, so it's confusing to know which way it might go. If you have an imbalance on the upside and imbalance on the downside, my question to you is, you have lost focus. Imbalance shouldn't be your attention. Liquidity should be your attention. Where the money is should be your attention. If I take a trade and my TP is not in a direction of liquidity, that particular trade, I call it a high risk trade. And I'm going to repeat that. If I take a trade and my TP is not in a direction of liquidity, I call that trade a high risk trade. And the reason why I call it high risk trade is because I'm not going to place my normal lot size. I'm probably going to go in with probably 0.02 lots. That's it. Just to see what happened with that trade. The reason is, out of probably 10 confirmation, I've already met like 7 of them. So I'm not going to leave that trade. I'm still going to take it. But then I call that trade a high risk trade. So guys, set the priorities right. You need to be able to identify a high probability trade and a high risk trade. The problem is there is money up and down. So how do you know which one price is looking to sweep? If there is money up and money down, my brother, stay out of the trade. There are lots of different pairs. Go and look at that pair. Make your life simple. I always say this to people. If your setup is not ready, and I remember Matt always says this in the group, you are paid to wait. If there is price, if there is liquidity on the upside, liquidity on the downside, and you don't know where to take that trade, my brother, just leave that trade. Go and find another pair and trade it. Don't confuse yourself. Don't make it complicated. But then you realize that as time goes on, as you trade, it becomes so easy for you to identify that even if there is imbalance on the top, there is liquidity on the top and bottom, I still know that this is how price is going to move. Take it easy. Don't put everything together. You're going to confuse yourself. You are paid to wait. I think EU is doing something. Almost at the area. We're observing, we're learning. Right, so guys, being able to identify an institutional candle, being able to identify an imbalance, now you have to understand the storyline. And the storyline is that you should be able to know the direction of price. Where is the order flow? If you know what an order flow is in the chat box, give me a 3 in the chat box if you know what an order flow is. Give me a 3 in the chat box. You don't know what an order flow is. Thank you very much. Let me show you. Let's just focus our attention in this area. Price goes up and come down. Price goes up and come down. Price goes up and come down. Look in this area. Price went up, mitigated off here. Price went up again, mitigated off where? Fill an imbalance. Price went up, mitigated off an imbalance. For how many times immediately I see 2 or 3 mitigations in an uptrend, I know that my order flow is an up order flow. Does that make sense? If I see 2 or 3, more than 2, if I see more than 2 mitigations in a particular trend, that becomes my order flow. If I see more than 2 mitigation in a particular trend, that becomes my order flow. Order flow is the overall trend. Thank you. However, you need to understand that between that trend, order flows are going to change. And this is what I mean, order flows are going to change. We have up, up, up. And what happened? Down, down, down. So in this case, the order flow is down. And how would I know the difference between when order flows are switching? That is the reason why we have the difference or the opportunity to use different time frames. Let's focus our attention to this area. I'm going to go on a 15 minutes time frame to show you what I mean. Look at this area. Look at the mitigation. Price went up. From here, price went up, came down, but we refused to create a higher high. And from there, look, price went down, came up, mitigated of 50% imbalance, dropped down, went up, mitigated of an institutional candle, dropped down, came up. Order flow is to the downside. However, when we got here, look, we went up and we refused to create a lower low. The very minute I see this happening in this box, my order flow has changed. Am I making sense to somebody? The very minute I see price refusing to form a lower low in my downtrend or a higher high in my uptrend, my order flow has changed. If you know this, you will always know when to close your trading profit rather than waiting for a TP. A shift in trend, thank you very much. We shift in trend. If you know this, if you know how to read order flow, this is how you are going to be able to determine, am I going to close my trading profit or wait for a TP? That is the difference. So for somebody who is able to close their trading profit before it hits TP or price come back to hit their stop loss, this is how they are able to read the charts. Sometimes I set my TP, but price did not get to my TP and I realized that the order flow has changed. Immediately I see a change in order flow. I am either going to close my trading profit or close with a partial. Exactly. In the chat box, based on price action on EU now failing to make a lower low, price will now aim for a higher high. And that is it. We refuse to make a lower low here, and straight away we create a high. We broke this structure right there. So this was an opportunity for you to place a buy trade. Simple as that. If you were in a sell, this was an opportunity for you to close your sell in profit. Am I breaking down certain things to people on the call right now? Thank you all. So the entry for this buy would be the institutional candle, of course, yeah. And that was it. Assuming you did not see the buy coming, you did not plan this trade, you don't understand what's going on. All you had to do is steady the order flow. Up, down, up, down, up, down. Are we creating a down? No. We created an up, we refused to create a down. This was the area. Immediately I open my chart and I see this. I'm going to place a buy. It is a W. The only difference with this W is that I have this. Again, in the chat box, what's that? The only difference between this W and the ones that you trade is that I have that divergence. And what this RSI is telling me is that for everybody who was in this buy, who was in this sell, sorry, for everybody who was in this sell, they are starting to shift their attention to the upside. Just think about it this way. Price was coming down, RSI was coming down, right? Price was coming down, RSI was coming down. So everybody in this trend was a sell-focused person. But then they got to this point and then they realized, no, at this point in time, I want to see a higher price. So I'm going to start thinking a buy. Think about the RSI as the people in the trade. And immediately they changed their mind into buy position, showing up. That's it, price began going up. So where will you choose your trade, assuming you were in a sell? Will it be around where you have the horizontal line? Currently, the only area that I will look for a sell is here. If price goes above here, I will not look for any more sell. And the only reason why I'm looking in that area is based on the fact that this is where we reacted off. The last time price reversed, we reversed off here. Let's show it. That's where we reversed off. So this was where the institutions are. So the next time they are coming, if they don't reverse from here, then they're going to sweep this liquidity. And the next thing they're going to sweep this liquidity. Simple as that. Can you show your entry for the buy in a yellow box? That was my entry. And the reason why that was my entry was this imbalance right there. That was just it. I realized that this imbalance had been fully filled. The next imbalance was here. So in no way that if I want to enter the trade, I could come any lower. That is my price area. And price came there. It did move a little bit lower, but that's it. I got the reversal that I wanted. And that was it. Price left. Where was the BOS here? The BOS here was here. Low, high, lower low. And what is this? Higher high. Price reversed straight into an imbalance and we're gone. It's as simple as that. Now with all this said and done, order flow has changed. As simple as that. And look at how it changed. So simple. We broke the structure, came back down there. I have divergence already showing me where the direction is now heading to. Now, if we currently looking in this area right now, the time is not right. If I don't see a reversal, I won't be crying about it. Currently, how many banks are opened? Probably no. None of the banks are open currently. So in this area, if I don't see the reversal, I won't be crying about it. However, look what's happening. We are approaching the area and see. Would you be surprised to see price reversing from here? This is the reason why yesterday I focused my attention on divergence. I don't see a break of market structure here, so I'm just going to sit and wait. All I'm going to do is I'm going to wait for price to react. I'm on a 1 minute time frame. So on a 1 minute time frame, don't jump into making profit. Don't jump into making profit. Just wait for the reaction, wait for the break of market structure and do a market execution. As simple as that. So now guys, let's talk one of the key things that I wanted to share today before we leave. If I really want to trade, this is my confirmations. Number one, identify a clear IC. Number one, that is the first thing that you want to do if you want to trade institutionally. Identify a clear IC, whatever time frame that you want to trade on. If it is the 1 hour time frame, identify a clear IC. Number two, make sure the IC is below the direction you want price to go. I'm talking about in bullet scenario. If you want to buy, let's make it clear here. If you want to buy, make sure IC is below the direction you want price to go. And it's the opposite for a sell. If you want to sell, make sure your IC is above. Let's put it down before somebody confuses themselves. If you If you want to sell, make sure your IC is above. Please show examples on the chat. I am going to show. For now, let me just simply give you the information. Number four, preferably your IC should sweep liquidity. Preferably, your IC should sweep liquidity. Number five, price from your IC should break market structure. Now let me pause here. I've spoken about identify a clear institutional candlestick. If you want to buy, make sure the IC is below the direction you want price to go. If you want to sell, make sure the IC is above where you want price to go. Preferably, your IC should sweep liquidity. When you say sweep liquidity, do you mean at the lowest or highest price? Well, for a buy scenario, you want your IC to sweep liquidity on the upside. Sorry, on a buy scenario, you want price to sweep the liquidity on the downside. And on a sell scenario, you want your liquidity to be taken on the upside. So this is what I mean. Let me put some lines out there to show you. In this scenario, this was the equal highs. So this then becomes your institutional candlestick, and this becomes the move down. You break market structure there. So once you get the retracement, back here, then you can sell. Does that make sense, guys? Preferably, your IC should sweep liquidity. Most of the time, I prefer to trade when price has already taken liquidity. So these are my confirmations. If I talk about any institutional candlestick that I don't take, this is what I mean. Preferably, I want it to take liquidity. Please, could you show us on charts? Let's find a clean example. Let me go on a higher time frame. Have I answered your question? Anybody who wants to see it on the chart? Look at that. Liquidity build up. Money here. Institutions goes above it. And what happened? Price breaks market structure. We come back in and we drop. This is the setup that you will see me personally trading. Yes, and it's because there is no reason for institutions to go up there. Let's try and find some more examples. Let me use this as an example. GBP card. Here's a perfect example right here. Am I starting to scare somebody with the stuff that I'm doing right now? Why not sell at the pink? The reason why I didn't sell at the pink is because I wanted to wait for this break of market structure. Remember, this low right here created this high. So until price come below this low, I'm not going to look to sell from this candle. Would you not consider this IC as a break of market structure? No, and the reason why I don't consider this is because this is where liquidity was purged. So I'm not going to take this as an institutional candlestick. If I know that there is a break of market structure here, it means that the price is likely to actually come up here. Do we always have to wait for the mitigation to happen before entering them? Of course. Once you have identified price as institutional candlestick has taken liquidity, all you need to do now is wait for break of market structure, retracement back into there, and a drop. The hardest thing is waiting for the retest of the institutional candle. Yeah, you're paid to wait. Yes, this will take time to understand, but this has to be 100% the way to trade. Plus also the R to R must mean that we can lose way more than winning. Do you think the risk to reward is bad? Let me put some stuff on it for you to see. If you should enter the trade from here, your stop loss is just there. And your target is below the low. Oh, okay. So in this case, I can lose like 6 trades and win probably just one, and I'm happy with the rest of the week. Which don't really happen to me, but yeah. Oh yeah, he means we can win less and still be in healthy profit. That's it. So this scenario is just a perfect scenario. Price is taking liquidity, and I was in this sell, by the way. I was in this sell based on, I think it was a cipher pattern. Yeah, it was one of the harmonic patterns. Look at that. It's just as simple as that, guys. Liquidity on the upside. Price takes the liquidity, We come down to break market structure, retracement back to the institutional candlestick, and a drop. That's it. When you see this on a high on the 1 hour time frame, do you always have to drop down to see the small? I don't have to. I say to people, don't complicate it. If I see price action on 1 hour and it's the cleanest, I am going to take my actions on 1 hour. That's it. You want me to do a top-down analysis? If I do a top-down analysis, it will. Okay, let's do one. Let's do one. What pair? What pair? People calling US 30 and all that. All right, I'm gonna go with GU. I'm gonna go with GU. If I look at the chart from monthly time frame, as I always do, I want to know which schematic is in play right now, which I don't expect anybody on this call to know it. Some of you are quite advanced, so you understand it. But then I want to know, do I have distribution, reaccumulation, redistribution, or accumulation, whatever it is? I want to know what it is. So in this case, we know that price was moving from the upside to the downside. Up, down, and down. In this case, this becomes my distribution, this becomes my redistribution, and that becomes accumulation. And before I confirm that as an accumulation, it has to go beneath where price started from, this here. So on the monthly time frame, price is below this, so I can call this an accumulation. If there is an accumulation here, let me show you one more trick. If there is accumulation here and reaccumulation here, and then I have distribution up here. If price is coming down and price do not fall below this area, any form of consolidation I see is not an accumulation. If I start an accumulation here, the next accumulation should form to take the liquidity from this area. And this is very key. The next accumulation should break that area. Does Wyckoff crossover into smart money? Yes, of course. Wyckoff is literally smart money. If you understand it properly, you should be able to use it properly. Yeah, guys, I think I have a few minutes left. So let's just run through it quickly with the top-down analysis. So now I know that this area was an accumulation, liquidity gone here. Now I want to understand, do I have a break of market structure? The structure that took liquidity was from here. To that low. So if I go above this area, then it means I have a break of market structure. And if I do have a break of market structure, now everything in this line from here to here is what I'm going to focus my attention on. Let's change the color. Everything from here is what I'm going to focus my attention on. Everything here, I don't care. Everything here, I don't care. As soon as I see this break of market structure up here, my attention is just from this movement right here. The movement from down here to this up and nothing else. Now I'm going to go on a weekly time frame. And if I go on a weekly time frame, what am I looking for? I'm looking for institutional candle. I'm looking for imbalance. So in this case, if I look on the weekly, there was an imbalance here that got filled. So we got nicely mitigated. Again, there was an imbalance here. An order block sitting there. And as you can tell, almost got filled. And in this case, I don't think price is going to come back down here again. So on the weekly, we can see the order flow is to the upside. We mitigated this one, we mitigated this two. Now, what is next? Liquidity to be taken from here. So this is my liquidity number one. This is my liquidity number two. My liquidity number three is here. Imbalances. And the only point in time I want to see price reversing is there. And the reason why I want that to happen is because I have an institutional candlestick that took liquidity. Let's zoom in for people to see. Liquidity up there. We pressed the liquidity, institutional candlestick right here.
Grandma's upstairs washing hands.
Our institutional move right there. So this is the only area I would be expecting price to come. As soon as we break this liquidity and that liquidity, the next move of GU is going to be so smooth and effortless. Now, how do I join this trade? The next institutional candlestick on the weekly is here. Would it be wise to enter a long buy now? No. And the reason why it's not wise to enter a long buy is because there is a break of market structure here. So price could potentially reverse from here and collapse again. The only time I would want to do a long buy is when this price, this movement right here, this movement from this low goes above this area. So this movement from here needs to create a higher high. Until then, I'm not considering a long-term buy. Until then, I'm not considering a long-term buy. So now we go on the daily time frame and still our attention is here. Yes, it has to. And the reason is, now I'm going to look, we have the break of market structure up here. Nicely, prices retracing. I want to see, was there an institutional move around this area? Which on the daily, everything here is pretty balanced. The only thing in this scenario is that we have this liquidity sitting here. And I can promise you price will never go down until it has taken this. Look at the other flow. That high right here got taken, price came down, mitigated, institutional candlestick went up. We broke this candlestick, came down, mitigated again, and we went up. We broke the market structure, we came down, mitigated, and we're going up. What tells you that JU wants to come down? It's not ready. It's not. Now we move on to 4-hour time frame. What do we see in the 4-hour time frame? Now on the 4-hour time frame, do I see a higher time frame break of market structure? No, I don't. I don't see. So the next thing I want to do is my target is here. If I'm in a buy from here, if you're in a buy from here, hallelujah, just wait for it. Just wait for it. And that is all you need. From this price action, you'll ask me, Francis, where is it? Why is it that you're talking about wait for it? The reason is there is an M sitting here. What do you call this? A strong resistance. And that strong resistance is just going to collapse. So in this case, if you choose this as an institutional candlestick, I'm sorry, you're going to get your stop loss smashed. The reason is the actual money is up here. If I want to see this down move, I want to see price at least climb up like this above this area. And once we sweep that area, I want to see price come back down to do this and then return a little bit up again. There, I would want to sell down. Apart from this scenario, apart from this shape, I won't be looking to sell GU. Apart from this shape right here, let's clear it. I want you to see the exact shape I'm talking about. The move from here should be able to clear this liquidity. I should see an institutional candlestick here. And then from that institutional candlestick, I have to break this low, this structure that created that high. I have to break it. And if I get a retracement, I will sell down. That's it. That's the only scenario you're going to be a seller. And even that, your sell is only going to come all the way down here. And that's it. This is the last up candle. This is the last up candle before the up move that broke market structure. This here, right here. So in this scenario, if we get this on GU, assuming we don't go past this area, and this is very key. If I don't go past this area, after the break of this liquidity here, then I'm going to sell GU back down to this area. And this is where I'll look. This is where I think somebody asked, can I buy GU long-term? This is your long-term ticket to buy GU. If we get this scenario to play, that's all. For me, Francis, once I see this, I'm always going to build my trade on the smaller time frame around this story. So on the smaller time frame, now I'm going to go, I need a trade to take. I want to pick up a trade. Look at the order flow. Up, break a market structure down into an imbalance, up, break a market structure into an institutional candlestick, up, break a market structure back to that mitigation candlestick, and there we go. We are in an up move. Guys, is this hard? Is this difficult to understand? After you have the understanding of order flow, the understanding of institutional candlestick, imbalances, and where liquidity is sitting, is this game hard to play? I find it fun. I take joy in it. The thing is, it's so easy that once you identify this, you can sleep, wake up, and then all you do is identify where the order flow is. Where are my institutional candlestick? Select it and go. Why is it not advisable to collect a few pips on the buy now to the point of liquidity? The reason is, if you enter a buy now, your stop loss is going to be up here. So let's create a scenario for you. If you should enter a buy right now, your stop loss is going to be down here, no matter what. Everywhere else you put your stop loss, you're likely to be hit. And your TP is going to be just above this liquidity, so here. Why do you want to enter this trade? Give me a reason why you want to enter this trade. I would not. To collect a few pips, but then you need to understand, what if that few pips I don't even get? What if you don't even get that few pips you're looking for? Then it means you're going to lose more. An institutional trader does not trade like that. We do not give ourselves that space to be taken for granted. And because of that, I won't take this trade. Once I see price at that level, no matter what it is, I'm just going to leave it to ride. The only scenario I am going to buy is this is now my setup. Price moved up. This is the break of market structure right here. If this is really a buy, I want to go on a smaller time frame and see what it is. This is my next entry right here. That is my next entry. If price retraces back here, and even that, you just missed an opportunity for price to go higher. And what is the opportunity I'm talking about? This. A mitigation candle right there. And look at how many times price wicked it before it went up. So after we broke this, this was the opportunity to re-enter for a buy. Guys, trading is fun if you understand that you're not going to leave yourself too easy for people to bite you. I'm glad it's all coming together. Don't leave yourself to be eaten. I will never go into a trade that is 1 to 2. Even 1 to 2, I don't like it. Most of the time, that trade, I won't take it. If my trade is 1 to 2, I don't want to take that trade. So if I lose 1. If I win, I gain 2. It's good, but not good enough. I could see setups where you could be taking 1 to 7, 1 to 5, 1 to 6. Why should you take a 1 to 2 trade? Why should you take a 1 to 2 trade? I know who you are, timekeeper. Can I do another example of what? Now, the last thing I want to do is go about harmonics, because with my harmonics and smart money squad, I just waiting to look as to how I do this. If I look in this area, I see a harmonic pattern. And that is a but harmonic pattern. X to A to B, B to C, C to D. I'm not going to be teaching harmonic patterns, so I won't talk about the ratios, but I know what it is. If you're in the harmonics group and you don't know, then it's your own fault, because I've spoken about this several times, and you should go and watch the video. I know that there's a harmonic pattern. I know the entry is here, but guys, look, there was an imbalance sitting there. An institutional candlestick sitting here. So I am going to wait for price to come down here. And look, what makes it even more fun is this. So I use the harmonics to determine the direction that price is going to move. And I use the smart money to sharpen my entry. Because I know the institutional candlestick is sitting here, even though my harmonic pattern is completing there, but my focus is in this green area. Now price come down to hit it, perfect, we move. Another example, a harmonic pattern sitting here, and this is probably a Gatly. Yes, it is a Gatly. X to A to B, B to C, and C to D. My entry is supposed to be here, but if I look around here, I see equal highs. Why should I enter the trade from here? No, I'm not going to enter the trade from there. I'm going to wait for liquidity purge. So we purged liquidity. We came down. Then I'm going to go on a smaller time frame. I don't know if I should be able to see that. This is the area I'm looking at. Price walked straight into my trap, and that's it, we drop. Harmonics has shown me the direction. Institutional trading has made me understand there is money sitting up here. I wait for the liquidity page. Price moved down, back into the institutional candlestick. There I am, I'm in the trade. And from there, look at the other flow. I think I called this trade live on one of our Zoom calls. I said people should enter, and I remember pulling a fib from here. And then I said, we're going to enter the sell from the 71% area. there. If you go in the harmonics group right now, this trade, I talked about it, and that was it. So do you first look for a harmonic pattern after for a snipe? Most of the time, harmonics is one of my confirmations. Harmonics is one of my confirmations. So if I have a harmonic pattern, it's just an easier way of analyzing the chart rather than doing a top-down analysis. All I do is I focus my attention on the harmonics and the space where the harmonic pattern is being created. In this scenario, it was the same thing. Hey, same stuff here. Liquidity, we purged liquidity, came down, and that's it. Price moved down nicely. We purged liquidity, and that's that trade right there. Now G-card is moving up again. Where is it going? The only place G-card is going to go maximum 50% of this area. And we shall continue the downtrend. That's it. What happens when you see break of structure within a bigger break of market structure? Okay, what happens? Let's try and see if we can find an example. EU done it last night. Let's see if a break of structure within a bigger break of structure. Look at that. So we broke this structure right here. And the main structure, you always have to understand the main structure is the last low right here that created that high. So for me, this is my trend. And if you understood this correctly, you should have been in that buy nicely. Pull your fib, premium area. Look at that, 78%. And if I pull my fib, I won't be surprised this is a Gatling pattern. X to A to B, B to C, C to D. This is when harmonics comes so handy. And look at where we sniped off. Institutional candle. For those that trade harmonics and you think harmonics is just so lame, this is what it does. When you identify on higher time frame, but go on a lower time frame for entries, do you set your TPs based on higher time frame? Yes. If I identify a trade on a higher time frame, my TP is going to be on a higher time frame, even if I squeeze my entry on smaller time frame. I won't be surprised we're going to be seeing consolidation here for the rest of the night, and price will just snipe up this area tomorrow morning and drop. I won't be surprised if I see that happen. And for me, this area, I'm already thinking about a shark pattern. 88.6, and it lines up perfectly with my entry. It's not by mistake that I trade harmonics, you know. I know what it do for me. It lines up just perfectly. So if I'm taking this trade, I know why I'm taking that trade. But if I trade shark patterns, my entry, my TP is just going to be at the 50% level. Usually I place just one TP, and that TP is going to be at the mitigation candle right here. Maximum. We come back here. and we'll go up again. That's all. Give me a 4 in the chat box if you've got some value right here. Brilliant. Brilliant. I'm so excited. I've been able to do something good today. Wow. Can you see my rules? You want me to continue, right? Okay, I'm gonna give you some few stuff about my rules. I do not take trades 1 to 2. If it is 1 to 2, if it is less than 1 to 3, I'm not taking that trade. And rule number 2, I don't turn my losing trades into my winning trades into losing trades. The moment I manage to come into profit, I am going to make sure that I close at least at break even. Number 3, I do not create setups. If the setups do not meet my criteria, I'm not going for the trade. After how many pips do you move your stop loss? I don't deal with pips. I don't deal with pips. Sorry, I'm going to say something here probably. Let me pause the recording before I say it. All right, so we're back on recording. So let's stay on and do the recording stuff now, guys. Now, after you've been able to identify a clear institutional candle, if you want to buy, make sure your IC is below the direction. If you want to sell, make sure your IC is above the direction. Preferably, your IC should sweep liquidity. And number 5, price from your IC should break market structure. Now you have all these 5 keys. The next thing that you need to do is patient, number 6. The reason why I put number 6 in as patience is that people always want to chase the breakout after liquidity has been taken. And if you don't make sure that you have patience, price can reverse on you at any time. How would you know that smart money has already done the business of sweeping liquidity? The only way you will be able to know is when price has broken market structure. As simple as that. The only way, I'm going to repeat this, the only way you would be able to know that smart money has taken liquidity is when price has broken market structure after the break, after the sweep. That is the reason why you need that patience. You need that P. And number 7, you're going to be waiting for that retracement back into your institutional candle. Back into IC. Now, one thing that people get confused about a lot, Francis, do I enter from the wick? Do I enter from the close? Do I enter from the 50%? For a starter, you are always going to enter off the close of the candle. Number 8, entry should be at the close of the candle. Oh, come on. Let me put IC before people get themselves confused. IC candle. Entry should be at the close of the IC candle. And number 9, your direction of TP has to have, your direction of TP has to have 1, imbalance. 2, another institutional move. Or 3, liquidity. If you don't have any of this, do not take that trade. And I repeat, if you do not have imbalance, another institutional candlestick, or liquidity in the direction of your TP, do not take that trade. Simple. And now, is this copyrighted? Nah, this is my personal confirmations. I don't give it to anybody, but yeah, today I'm teaching this. And I don't want you coming back on and telling me Francis, I did this and my trade did not hit TP. I did that and my trade did not hit TP. So I'm happily giving you my confirmation. You can try this and I can guarantee you guys, I can guarantee you 80% time you're going to win your trade. And all these keys I'm giving you, I want you to stick to trading the lowest time frame to be an hour, an hourly chart. Should be your lowest time frame for this confirmations, and I can guarantee you 80% of the time you're going to be profitable. If you are able to become 80% profitable using this strategy, you don't need a signal. You don't need anybody to tell you your trade is right. Your account will consistently grow. Guess what? I do lose trades. I do lose trades. I do lose trades. But rarely I'm going to finish a week less than what I started with. Rarely. If this is what you want, today you've got it. Should entry be at the wick of the close? No. Let me show you what I mean by entry at the close. For instance, in this situation, this is the institutional candlestick right here. So I mean your entry should be here. So that close of that candlestick is where you're looking at. That body right there. I want you to put at the body and nowhere else. Nowhere else. Prices at the area. Liquidity was created above that area. Don't be surprised to see price drop. On that note, if you want to take a screenshot, do it. My time is done. If you have any question, feel free to message in the groups. Feel free to message me. That's it. Now I can't carry on if I can, because you know what? Other people need to take their places. You know, April should have taken over at 9 o'clock and I'm still on here. So guys, thank you all for jumping on the call. If you've got some value, you know yourself. I think April is on the call. I'm gonna hand over to April quickly for the closing of our 4-day bootcamp. Do I have April on the call? Oh no, April is gone away. All right, Nana, I'm gonna hand over to you for the closing of the call. Yeah? If you're on, please unmute yourself and
Wow. Guys, let's give it up for Francis. Drop some fire, drop some emoji, drop some ones, drop some twos. It's been 2 straight hours of pure action. Guys, I can't be on the chat for 2 hours now. It's been 2 straight hours from one level to the other, from one level to the other. We just have to say, Francis, yeah, you've done enough. Right. Let's appreciate this man. Let's follow him on all socials. Let's tag him. And then let's get him to be an educator. Francis, we are most grateful to you for your time, for your energy, for your vibe, for everything. We can't thank you enough. And guys, whatever he's taught on this platform, take it and run with it. That is where it all begins. You have to take an action. Don't just be on this call, be excited today, and then tomorrow quench the fire. No, it doesn't work that way. And it's not going to sink in with just today, like watching it once. You have to do it over and over and over again. When I first started with this, right, a 30 minutes video, it took me 3 hours to watch it. Watch it, hear some nuggets, write it down, pause it, back, rewind, forward, back, rewind, get all my notes. That's the only way you can make progress. All right, this week has been amazing.